G'day traders, Sam here to give you another video, and this is on KSM, and this could be seen as an educational video as well. So I'm going to do some explanation and see if you can pick up some tips from this. While we do that, we can also look at what opportunities we missed out and what opportunities are there to come. So the prerequisites for this video is you understanding Wyckoff structure. You understand the Elliott wave theory, not too complicated, just the basics, and using TradingView as well. So let's start. On my chart, I have the 200 moving average on the 4 hour as a template. Then I have the 200 EMA and SMA on the daily, and I also have the weekly, but I won't apply it here. And the 21 moving average as well on the daily as well. That will come later. What we have here, and you can pretty much see, no, that's not the one. This is the one. We saw the Wyckoff distribution taking place. So let's see, that is the level of the neckline. Let me just apply the template on this one. Cool. And that is our neckline. And so you can try to align this with the top, and you will see that if I'll just add this here, we have our buying climax. We have our secondary test. We might as well do capital. And a now failed rally. This is one of four basic Wyckoff structures. And in amongst all that, you will see formations taking place and breakdowns. So just simple rules. Have a straight line where there's likely support, and if it breaks there, you can say that, okay, that's an ascending wedge or rising wedge, and when it breaks down, you do the trading. So that was a good opportunity there. Once you saw most of this take place and you see this breakdown, you should be comfortable that it is a topping off structure, because we failed to make new highs. The other high could have been, in some charts, they actually go slightly higher and then come down. And what you do is you apply Fibonacci. So if this is our Fibonacci level, you make that as a 1, where the buying climax is, and then you'll have, something like the 1.272 or 1.414 being the next target. But in this case, it didn't eventuate, and we're on the downtrend. And what we see is some commonality where there's a trend line, and in this case, it's a broadening wedge. So it's working its way to a reversal of some sort, but in this broadening wedge. I won't go into this area, but you can see, actually I'll just give you this one. That was our, what we had. That was our automatic response. So you can see when that happens, always when there's a buying climax, which is wave 3 to 4. So if I was to turn on Elliott wave, this one, not there yet. So oops, I just should have done that. Okay, so if we were to look at this, we would have assumed that this is wave 5. So maybe 1, 2, 3, 4, 5. Right? So we had our count there. We had our ABC correction. which is a real unorthodox one. And then we had our smaller, minor ABC, Elliott wave to wave 5. So this is where the alleyway theory comes in. You can say, okay, that's 1, 2, 3, 4, 5, and then here we go down. Now, we could have a number of ways of approaching this. That is a measured move to that. And you can see, I never did this before. It was perfect. Okay. We can also apply Elliott wave to that structure. Let's just reverse this. And you can see on the way down, the 1.618. And if we change this, you can see that potentially, you just stretch this out a bit, that could be our next target on the 1.272. Now let's have a closer look at this and see what we missed out on. So you can see this was actually a broadening wedge, and it's done. So yeah, you might find a bit of a bounce, but this time, what is it? Is the 200 on the 4 hour is our main resistance. Um, it's a good indicator, and what we want to see, if we were to get this bounce, we were looking for this bounce, and yes, it got the 618 region. It didn't quite get to the. So what we had is actually, let's do it the other way. You can see the 382 acting as resistance, and we had this trend line on the bottom. So this bottom trend line acted on line with the 0.382 for this impulse, and we got the rejection. And now what I'm thinking right here is it's a bit difficult. However, it seems to be as a rising wedge as well. So this seems to be a rising wedge, and if it's a rising wedge, it's already hit its first target. The second target's down there. However, I do see. Excuse me a sec. Okay, guys. Sorry for that. I just had a phone call. Um, Now, looking at this structure, we have two possibilities. That's a broadening wedge right there, along with this structure. So that looks like a bearish structure. It's touching this lower level, and that lower level is aligned to this strategy there. So what it's looking like, it's doing this last part. So if we look at it from an A, B, C, D, E, or Elliott wave count perspective, we have our downtrend, we have A, we have our B, we have our C, and we have our D. And that's pretty much it. So the next level is down there, or the 1, 2, 3, 4, 5. Okay. Along with this, we've counted our 5 Elliott waves in the minor level, and what we can see that is potentially, so this could be our wave 3 and 4. So if we do this, so if this is our wave 1, 2, 3, 4, and wave 5 is somewhere there, this could come into effect. So wave 5 could be in that spot there, but that's for the short term. I do believe, from a macro perspective, from this chart structure, we could potentially either be that there to the 1.272, or further down to there. So let's just put those in. So this is what I see from the big picture perspective. I'll just put target 2 and my third target here. Let's see how that goes. Right. So this seems to be playing out. The confirmation is once this breaks down, gets to that Y5, we'll probably see further downs. Okay, so that's what my thinking is with KSM. Now let's look at on the daily and just see what the indicators tell us. Right, we can get rid of that for now. So yes, and that pretty much lines up with the previous bottom, which is not a bad range. So I could see that making right there to the bottom of this. That's definitely a good support level. And however, this is previous support as well. So which is close to our target. And when you think about it, the bull run started from this cycle. Was a bull when it came in. This was a bullish market. So when it came in, I don't know if there's more history to this, but with this chart, that's what I got. I'll have a look at see if there are better charts out there. But when we look at that, and then now let's look at the indicators. When can we go bullish? There was a bullish divergence there that took place on the daily. So that bounce, this rising wedge, did take place with that bullish divergence. However, if we were to, we should say that when we break this trend line on the RSI, we could be bullish. But at the same time, you can see this as well. This was a reject. This is like a bear flag, really. And you can say, all right, that's another way, or that's the rising wedge. And now we've got a channel. So we might just find a bounce. And what's likely to take place, if I look at this perspective from this RSI, we might just get that little bounce and then a rejection and come back down to the revisit. Now, where can we see that revisit come to? Not an easy one. We can say that is the level there. We also have this point as well. So very close to each other. Um, we can see with this Phoenix that the momentum is pretty much dropped with this big red candle, right? This is a daily chart, and that's a big red candle that just undid pretty much a week's worth of work. So that just came down. This RSI, we could say that is let's just put green. The green RSI is now below 50% on the daily. The red wasn't really that high, so I do see this coming down. This might just continue going down for all you know. If I can get that. If this continues to go down, then this red will also come down, and then that will be completely bearish. And then we see all these, and then we're going to see this crossover again. So this green RSI, we want to see go above 50% before we even thinking of being bullish. So using the indicators from that perspective, that's what I have. But definitely this looks like a rising wedge that just failed or break down. So on the daily, you can see that. Very bearish candle. And we talked about the broadening wedge scenario there. So the indicators are supporting potentially a bounce to this neckline. So we've got the daily levels. So let's look at the daily levels here. That's our daily level there. Right, so we could probably get a rejection there. And then we have this other daily level. More into the golden ratio right there. So that could be more significant there. That is a level for sure. And that has alignment to these levels here, where all the wicks are. So it might just go a bit more. Let's have a closer look on the daily. So look at my Fibonacci. So if that's the bottom, and it's not because they wick down there. Just got to reverse this for a sec. Sorry, guys. So this is my, yeah, that is more, that Fibonacci. So this could potentially come to that spot there. So if there is a bounce, this Fibonacci is the first resistance and it's likely to play out. So that might be a shortened position, and we look at it on the 4 hour. Or however, it can go up to this level, and then we look for the short. It's going to be messy, but really depends on what Bitcoin's doing at the time. I don't see this being a bullish sign. I don't see the SP 500 being bullish at all. So, yeah, things are going bearish. That's how I see it at the moment. I'll leave it at that, guys, and I'll talk to you soon. Cheers.